The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, David White, the koala bear of Wall Street. Yes, just cute and cuddly all day long. Anyway, we've got a very interesting market yet again today. Talk about volatility. They take the market down, and of course, in the afternoon, they take it back up. And we're in the up phase yet again. But I have a feeling we are building energy to break this market. And we'll have to see how that works out the rest of the day. I suspect, though, they intend to hold this market up through about 10:30 tomorrow morning, where they're going to try to push out some more IPOs. And at that point, we'll get a much better view of what they intend. But you can keep a market up for a short amount of time. You can support it and do something like this for a few days. If you're Wall Street, you play with a lot of other people's money, and they give you a great deal of discretion to use that money. And Wall Street probably doesn't use it correctly, certainly not for the benefit of the people's money it is. But if you've got other people's money and you need to throw some money at the market, it better be somebody else's money. And probably what we're seeing here today. My belief, anyway, is this doesn't look like any strong move. What we do have is huge volume, though, 2.3 billion shares as we start the day's show. And why is that important? Probably because the first 30 minutes had some of the lowest volume that we've seen since the market cracked before. So we'll be looking at it anyway. Up 2 points on the S&P cash, and we'll see what they can do. But I have a feeling that they're going to try to hold this thing up into tomorrow, and I think fears are probably going to get the better of the market, probably sell off into the close tomorrow. But certainly I think we had a spot this morning that gave a clear indication that the market was ready to crack again, even though they're going to try to hold this thing up as long as possible. So huge volume came out later as we sold off. This volume has been good, but not as good as the down volume we had early in the day. So we'll get into this in more in depth. On this day in 1912, early in the morning after striking an iceberg around midnight, the Titanic sinks to the bottom of the North Atlantic. Making a cold calculation about the uninsured value of the vessel and counting the 1,500 fatalities at zero, the stock market crunches $2.6 million off the total capitalization of the International Mercantile Marine Company, the owner of the doomed ocean liner. And I'll always remember my grandmother. She grew up around Springfield, Missouri, a little town called Macon. And I've been down there. She went, I think, through third grade, and then her father took her out of school to help build stone fences like the kind you see all over Scotland. And we went through there and looked at all the ones that she built over 5 or 6 years when she was doing that as a child. And she told me probably the thing that she remembered the most was all the bells ringing on this day in 1912. And it made news in a small little hamlet in Missouri. She told me a few other things that were interesting about growing up in the early 1900s in a very, very small town. But very interesting. A lot of hubris, of course, in that. Also, in 1998, the New York Stock Exchange implements its circuit breaker rules, mandating trading halts when the market drops at least 10%. although those have been severely modified to even lower levels now, and on individual stocks too, besides just the major indexes. Of course, last night we had the blood moon. Brrr, ooh, it's creepy, children. Ooh, the blood moon. Everybody probably reading far too much into this. I went out at 3 o'clock in the morning, looked at it for about 5 minutes, went right back to bed. But it was interesting. I have to say that. But I can see how probably witch doctors and people that believe in all manners of things other than science could put meaning into a red moon that happens every, 6 years or so. But what can you say? I don't remember this being called a red moon. I always remember it called just what it was, which is an eclipse. But I guess a lot of people reading a lot more into it. So we'll take a look at that. I did put a special report about the low volume this morning, and this is it from the Path of Least Resistance, my daily newsletter. And I said the volume in the first 30 minutes is in for the first 30 minutes, and it was poor at around 325 million shares on the New York Stock Exchange consolidated tape. It was similar to the last time the market cracked hard. I would suspect that if you missed any of the trades right now, this would give you a chance to get back in above 1842 on the S&P cash and or add to positions. But that lasted, like I said, just about as long as ice cream on asphalt in Alabama in July. It lasted all about 15 seconds. I hardly could click send fast enough before it started melting and rolling over. Of course, a lot of that is speculation on what's happening in the Ukraine today. A lot of food fights going on with various big traders. One right now is Daniel Loeb or Dan Loeb getting into a big fighting match with Sotheby's. He wants to get two nominees on the board. They basically tell him that, and him and the people he wants to put on, that they have absolutely no understanding of the art market and or the auction market, and therefore these people are just not. They just don't know anything and don't know anything about art. Of course, probably the big problem is that old Daniel Loeb has a huge art collection. Pieces from his collection were featured in the 2009 exhibit at the Museum of Modern Art, although otherwise known as MoMA, which I like to go to, or Momo. I like to go when I'm in New York. I hadn't been in a long time, but always very interesting stuff to see there, and at the Guggenheim. If you're ever in New York, probably two places well worth going to. But we're seeing more and more of these activists getting in fights. The April housing index numbers came in and missed expectation. They came in below the 50 mark, which is neutral at 47, and kind of put a little bit of hurt on some of these stocks. When I looked earlier today on the home builders, most of them were off 1.5% to 2.5%. Right now, what do we have? Pretty much the same. HOV off 3.75%. FNMA off just about 2%. Ryland off just a little less than 2%. And Toll Brothers off 1.6% as we speak. So there's more going on here than simply the tech wreck. We are seeing some major changes. Talked a little bit about it, shorting crude yesterday and or energy. And I said, well, one of the things I had noticed was that report that was the biggest drop in gasoline uses in the last 30 days that had ever happened. And, of course, fuel prices around here had been up 50 cents a gallon from their lows just about 30 or 40 days ago. So I could see a lot of people, when those numbers spike, quit using it. But as always, you can call me at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can post a message in the den if you would like. And, got a good question here. John from Oregon says, where the heck do they find that stuff they play as bumper music? I'm pretty sure that it's the bottom of the barrel, John. And apparently you're a guy with a very good and well-rounded musical taste. Let's put it that way. Yes, they have to go look high and low to find something that horrible. There was no Peter Gabriel. It was all a bunch of disco crap. Okay, that was yesterday. You're judged. We're getting people throwing in comments and IMs from the engineering staff at TFNN. You're not judged on what you did yesterday. You're judged on what you did today, and it was horrible disco music, and everybody knows it. So they can go back and put that in your pipe and smoke it, Mr. Engineer. So anyway, as we look at this market, we look at what's happening. Yesterday we saw, and Friday saw, a huge move to crush the volatility curve, at least in options. As we ran back up to the top yesterday, everybody bought a huge amount of downside risk in options. And it looks to me like from one day to the next, we're having a huge manic depressive mood in these markets. But yesterday it was about flat all the way down to about 1750. I'm going to see if I can bring this up right now. And now, talk about a leg and what a day of difference makes. They were in here buying all kinds of options, and this is what the option curve looks like now for the SPYs. We had a nice flat move almost up to 200 yesterday. That's ticked up on the upside. On the downside, it was flat down to about 175. Now we have huge amounts of interest, people buying way out of the money puts yesterday all the way through closing and somewhat this morning. And I've been looking for a low of about 1810 on the S&P cash. We got, down to about 1816, maybe close enough. I suspect what will happen is that we'll get a few of these IPOs out of the way, and we'll start selling off, probably back down to that 1810 level by tomorrow's close. But, of course, we've got several earnings after the bell tonight that will put a lot in that. Some things not helping the market, or at least banks today, are Janet Yellen. She came out last night and said that the largest U.S. banks may need to hold additional capital to withstand periods of financial stress. Yellen told a banking conference in Atlanta that currently rules on how much capital banks must hold to protect against losses don't address all threats. And that's probably about the smartest thing I've heard from a Fed president in 20 years. She finally understands you don't know what you don't know. We'll be back in just a minute. Give me a call, 877-927-6648 or path@tfnn.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you are under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Wanted to look at some stocks that are moving today. Wynn Resorts was down about 6% earlier. I think it's up, and it's off a little bit off its lows. But none of this China news doing any of these companies that rely heavily on Chinese gambling to do much. But volume has picked up. It went back down. Certainly it looks like Wynn wants to come back and test the January 27th low at 187.78. And if you break that with any kind of volume, certainly we've got pretty much volume exceeding that today. We did go into that candle, at least for the price point of the body of that candle of that January 27th low. So I think we're going to go down and bust that 187. And if we get heavier volume, this thing has a huge down leg that could go to 165, and from there maybe 138. So we're at some pretty big inflection levels of some of these stocks. Apple was down earlier too. This thing certainly makes it look like it is rolling over at least somewhat. Pretty surprising for expiration that we're going to find these levels. But this thing certainly wants to go back and check out that 496 level, which is confluence on Apple, but also the January 31st low at $490.50. But volume not picking up on Apple today, so it's one of those stocks. And, of course, when you look at it compared to the February 27th and 26th lows, pretty much in this price range. You had about 10 million shares, about 7.2 so far. So we may get close to coming into that previous low with at least the same amount, which really makes me think that 490, 496 level really will be tested again. So don't see anything in the den. Don't see anything maybe in the email, other than John from Oregon, who wants to know where they find this horrible stuff. Anyway, we looked at Apple and had a email from yesterday I didn't have time to get. Wayne from Texas wanted me to look at Netflix. I don't know, other than, this thing has a 3-gap play. It's filled the first gap. We're probably going to see, like today, it's 3.2 million shares compared to 4.8 and 5.7 previously around this price range. Let's say we go to 4.5 million shares today. That probably means we're going to get a bounce out of here. I'd love to get a bounce maybe up to 370 or something like that, 375, and get the next ABC level down on this. What we do know is the news on Netflix comes out just about every day is pretty horrific. The latest of the last couple of days, what we do know is that since they paid off Comcast to help them streaming, the streaming speed has gone up 65% from Comcast. So why you can't prove Comcast are evil bastards, I know in my heart they are. But you do know that these big carriers are probably doing everything they can to slow down speed and get the toll road going as it should, so to speak. They really can't come after individual users. So they've decided that the best thing now is to extort money out of people like Netflix. I thought Netflix always had this problem in that there is no firm law on it. And, of course, Comcast and Time Warner more than able to lie their rear ends off about how all of this works underneath it. But I think this is the first leg in Netflix move back down to probably in the $60 range over time. And we'll see the next, like an onion, a lot of the issues in the Netflix come out and this thing come back down to earth. I think the next big onion peel and the next big, huge gap fill is going to be most likely based on just how much the content they have actually cost them. They've been expensing it off for multiple years, and I think eventually, probably fairly soon, that will start catching up to them. I have a question for JNJ in the den. He says FFIV, and I'm not exactly sure what he wants to do with FFIV. Short it, maybe he can say. F5 networks certainly have some decent energy to the downside. Had a big move down on the 4th, which is the highest volume here in a while. That was 3.2 million shares. Now this thing's kind of going sideways and bouncing around. We've got, let's say, we'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
We've got Bob on the line from Fort Lauderdale. And how are you doing today, Bob?
Hey, hi. How you doing?
Fantastic.
Could you tell me if you think we could see another chance of Tesla reaching a short opportunity in the 200s?
Yeah, I think you could get a bounce out of this thing back up to 230. You basically, there's no guarantee, but if I was going to pull the trigger on this one again, I was short on it in 250 in the newsletter and covered it way too soon because of the market going back up and retesting the highs. But we had a good run on it, made some money on it. But I think if you were going to pull the trigger on this thing, you'd want it back into that candle of the third. And I know that's going to be a little tough, but my guess this thing is still hugely short. You can get a wicked retracement on it. I've said this many times, and like my newsletter this morning when I did the update and said, hey, I think here's an opportunity to maybe get back into this market at 1842. It lasted all of about 15 seconds. The problem is going to be you're going to have to be real Johnny on the spot and have nerves of steel to pull the trigger on this thing when it does get the counterbounce. But these things are acting much like the dot-coms of 2000, and that is that they are wickedly good shorts, but you have to be basically sitting right in front of the monitor and be committed before these things get back up there, because you don't get that much time. Huh?
What did your chart show? I couldn't see that actual number you said that it could get up to.
This little 2-day pop up here on the second and third, up here in the 230, got up to what high of 235.73, and the day before it got the high of 230.89 on the second and third.
Huge.
Huh?
That's a huge pop from here, though, don't you think?
Probably not. I probably would say so if it wasn't Tesla that went to 265 from 30, pretty much all straight up. So to me, when you have to look at it in the context of just how violent the stock moves, and the problem is that you may not get it, but that would be. To me, that would be the only decent risk-reward number would be in that 230 level, and you see a huge amount of volume and a huge price spike, and probably the last $5 or $10 of that comes on no volume. And then that's the end of the short squeeze, and you can pull the trigger on it again. But that's going to be the problem. You're going to sit there, have to be watching it most of the day, watch the volume characteristics of it, and make sure that the volume just taps out when you get back to that 230 level, especially the last $5 or $10 of it. Because when I've looked at, go ahead.
Let me converse with you, because right before the break, you were talking about they're going to want to get these IPOs out, and maybe the last hurrah might, stop midday tomorrow. Wouldn't Tesla be in that last hurrah with the whole, market itself?
No, I think that they're just holding it up. I would say that your chances of getting this back up there are probably not huge, but there's lots of other stocks besides Tesla. But
how about even over 200 this week?
Say that again.
How about even over 200? The $200 on the Tesla price tag.
What about it?
Just for this week. And I'm not even thinking, I wasn't even looking at 230s. I was just content thinking maybe 200.
Well, I would say that this market, this is my belief right now, this market's acting a great deal like the dot-com bust. And the one thing I really learned trading that time period on these stocks that have little or no earnings is that they do have super wild retracements. And I don't have any evidence to say that Tesla won't have that. It may be all in one day, it may be in 2 days, but the key is going to be to catching this at the right time and getting shorts on is watching these things and watching the last $5-10 of moves in these things with almost ludicrously low volume. I remember watching Ryland Homes one time, and it's pre-split a long time ago, but they took the thing from like $71 to $80 on 100,000 shares all day long, when normally it was trading at that time 1.5 million shares. And to see a tenth of the volume of the day move a stock $8 tells you one thing, and that is the short squeeze is on. And you're looking for those kind of clues right now in a market that is fairly bearish. That is taking shorts to the cleaners, and then once the weakest hands have been whipped out of the stock that you're looking to short, then you can pull the trigger. But shorts are notoriously the weakest hand, and you're looking for massive short-term squeezes with no volume to guarantee you that anybody that was going to cover their shorts has covered. And then you can get short again. And normally the next big down leg starts in the stock or the indexes when that happens. I think we've seen a couple of saw that today in the S&Ps, where it went down to 18, 16, and now they're back in here trying to shovel as fast as they can. But to me, it looks like I imagine that we're going to see the same thing we saw last Friday, which as soon as the IPOs come out, everybody's going to be taken off again. But that's just my speculation at the moment.
It's speculation. You're right. You're right. Thank you.
You bet. So, yeah, we've had a big day out here, big pop in the markets. We're up 6 points on the S&P cash now, but it just 2.5 billion shares. a lot of action in a light week with light trading. What you didn't want to see is this market go up on light volume. You would have liked to seen us go into Thursday down on light volume if you were bullish, and just not getting that so much right now. But I know a lot of people will be talking this action up as extremely bullish. I think I'm going to save my judgment probably into next week, because I don't think this really truly means a great deal so far. But up 6 points, volume is fairly decent. Let's see what else we have. Okay. Okay. So I had a question about FFIV, and we have a little bit more information about what he was talking about. He's looking at FFIV long, and I think what he's looking at in the DIN here, J&J, is this huge spike up on FFIV on the 23rd of January. What I dislike about this is it sold off most of the day into the close, but it did have huge volume of 7.2 million shares. Came back in that with 3.2 million shares on the 11th, and we've popped up a couple of days. What I like, or what I want on this one, because there are multiple gaps right at this $100 level, would be to get the FFIB back to 100 on very, very light volume to pull the trigger on it. But if you look back, let's see if I can't go back a little farther and find out where this gap starts. That gap at $100, gap down on fairly decent volume on February 25th of 2013. And that was, what, 3.7 million shares. So we're already a year through that gap. That gap has extended and double gapped, and now, what, triple gapped, because there's actually a gap open from the 24th of January 2013. So that $100 level is very gappy. My guess is that you want that to come in there and fill that 100 level with light volume to pull the trigger on FFIV. Of course, this thing was up to 116.71, but we'll have to take a look at that. Anyway, we're going to go to some other stocks if I don't have any other emails. Don't have any emails. We took care of Bob and Tesla. And what else do we have out here? I have a lot of stocks I wanted to look at. Sohu, S-O-H-U. Some of these Chinese stocks, again, we've got numbers coming out, I think, overnight on the Chinese economy. I think they're employment numbers. There's something I remember. But we want to be watching those. Sohu, one of these companies that may be making a bottom, going after the November 7th, 2013 low. It's $60.01. Had 1.9 million shares. Pierced through that April 7th, but the volume was half, so we went ahead and popped. Came back down. Volume was light again today on Sohu, but not a bad-looking chart. In fact, there are a lot of charts out here that are not really that bad-looking. Sohu's online media, search, gaming, community, and mobile services in the People's Republic of China, otherwise known as the Chi-Coms, Chinese communists. Anyway, it is, there are more than enough of these companies out here that are testing lows on lighter volume. Rackspace was one that I was curious about. This thing came down on horrifically huge volume on February 12th of 14 million shares. Of course, pretty much torn apart by cost-cutting, or actually price-cutting from Amazon, Microsoft, IBM. In fact, just about everybody cuts their pricing on cloud services about once a month, it seems like. This is might be a very interesting. If this market actually does turn around, which I'm not bullish at the moment, there are some very nice and sweet-looking lows out here. Rackspace, RAX, is one of those, and that is that February 12th low at $30.96, 14 million shares. We've gone below that today, and I'm going to continue to keep an eye on some of these out here. Volume did pull out a little bit. This may need some consolidation also, but could be a nice trade back up to that $40.97 high from February 10th if this is now just in the lower trading range. But looking at the cigarette companies also, Altria, symbol MO, this thing's hanging out here fairly high. Doji today, right now, with 4 million shares, so not a lot of volume out here. I don't remember when earnings for Altria comes up. April 24th for Altria. But people still running to a lot of these sin companies to get everything correct. And a little less risky. People will always smoke their cigarettes, I guess. Some of these other companies that could be, and you could be looking at long, are Illumina, ILMN. Nice bounce on huge volume on the 17th of January, 7.2 million shares. Come back into that with 3.3 million shares on March 27th. Now it's even a little bit more of filling that gap today on April 15th, down to 127.90, 127.69 with 1.4 million shares. So there are some out here that don't look all that bad, and most of these that don't look bad are the biotechs. Look like they've pretty much pulled back for a great deal of them back to the support levels. So it's going to be interesting. What else do we have out here? Did we do FireEye? I think FireEye is another one of these out here, these super high flyers that have come back to the gaps where these things took off. In the case of FireEye, the 3rd of January, this thing took off with almost 10 million shares, got back into this gap on April 7th with 7.7 million shares, basically filled half the gap today, 3.9 million shares so far. So not a bad setup, like I said, on a lot of these, but I have a feeling we're more in the way of rotation for stocks going lower in the near future instead of up. But well, we've got Mr. Market deciding that it wants to try to go back up one more time. What do we have here? 1838. This is where we should be finding very, very stiff resistance right now, is that 1838 level on the S&P cash. And I figure that if we can close over that, maybe they can move this up to 1850 for the close tomorrow. But I'm saying there's about 80% chance that they go ahead and push this thing down into the close tomorrow, going into the long weekend where a lot of people probably don't want to be long risk over a 3-day weekend and take a look at it. You can give me a call at 877-927-6648. That's 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always put a message in the den. But we'll be back in just we got just a little longer to go. But we'll probably want to be, when we come back, be talking about Yahoo earnings after tonight. And this thing has been rather weak. Intel also after the bell tonight. And this one actually kind of matching previous highs out here on volume. And maybe the death of the PC has been exaggerated, much like Dewey beating Truman. We'll be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And as usual on Tuesdays and Thursdays, we see Andy Hecht warming up in the bullpen for the next hour. It'll be interesting to hear what he has to say after being gone for a week. And maybe learn something from those students in Colorado. But hopefully it wasn't about smoking weed. Anyway, I'm going to be very interested to hear what he thinks about energy. I don't think I'd want to be short going into the long weekend, but I know a lot of people are looking at these charts and basically looking at some fairly definitive weakness. I think I would probably want to make it through the weekend and maybe pull the trigger Sunday night if I was going to do anything, and or Monday morning if we were going to go with an ETF. We've got a lot of earnings coming up, not so much in the energy sector, but a little on the tech sector after tonight. We've got Intel and Yahoo. Intel pretty much tested its previous high with the same volume. The energy on this last leg up, not really awe-inspiring. In fact, we had some big moves down to 23.36. Probably the discussion of the end of the PC well overdone. The question is just whether or not Intel can hold its highs here. But we're going to be seeing a lot of people upgrade their machines over the next year. And they've been doing a lot to actually get back into the wearable market. I'm writing about that today in my Tech Insider. But, yeah, tonight, Intel, Yahoo, I'm not exactly sure what's wrong with Yahoo other than this Alibaba IPO being put off. But there's something probably wrong inside Yahoo. Maybe we find out tonight what's going on. But I haven't been able to pick up on it other than a lot of people just wanted out of it. Maybe they'll come back and buy it in the third quarter for the run-up to the Alibaba IPO. AMEX? AMEX? Is that what it is? Amex? What is American Express? American Express AXP is tomorrow night. And, of course, some of these financials have already rolled over. American Express, of course, gave a clear indication. And I remember we were talking with Tom O'Brien when we were doing the Art of Timing the Trade Charts seminar about just how plain a lot of these financials were at the highs. This was one of the most plain, where it was testing a 15 million share high from January 17th and came into it with 4 million shares. Pretty good indication this thing is in an upper trading range now, and that would extend down to the February 4th low at 82.40, which this thing kind of looks like it would race to on any bad news. There's also two gaps down at 76.77 and one again down at 72, and it's kind of hard to see what's going on besides or behind some of these stocks, but certainly doesn't look incredibly bullish on this, but we'll see some. Other stocks of interest, like we said, maybe I talked about Alexion. Maybe I didn't. Alexion Pharmaceuticals. But certainly a lot of these biotechs that have been that had blow-off tops are finally finding support areas. ALXN is one of those, that huge bounce on the 30th of January with 5.8 million shares, starting to fill it, pretty much going through the fill today on some of these, 1.4 million shares today. So some of these are pretty much down. Anyway, we'll look forward to the fish that swims in the sea, Andy Heck, and we'll have to hear what he says in the next hour. Meanwhile, sell when you can, not when you have to. See you tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.